Hello traders, today is the 14th of March. My name is Double Hornsey, market analyst trading, and today I'll be looking at the week ahead. Okay, I'm going to start with the YouTrading.com Forex heat map. We can see here that the euro is green across the board. The yen and the Australian dollar are competing for the weakest currencies. Currently, the heat map isn't showing a real risk on, risk off. It's kind of mixed. So we're basically trading on news headlines. If we go to what is actually happening in the news, we can see that Ukraine has asked Russia for guarantees in security and immediate withdrawal of troops and a ceasefire, obviously. We've also got COVID coming back into China. And if we go to the sort of squawk, we can see here that Ukraine negotiator says fourth round of Ukraine-Russia conflict talks are underway. So we're looking to see if we can get some positive news out of those talks today and this week, and see if we can get a positive market reaction. If we go to the active trader platform, go to the German DAX, this isn't hourly, but if I go to 5-minute chart, we had a 500 or almost 550 point spike higher on the back of Russian President Putin saying that there had been a positive sort of twist or move in the talks. That got the market obviously excited for 10 minutes before it retraced. We did gap up higher over the sort of open this week, but the market's obviously clearly coiled to go higher as soon as the risk of Russia and Ukraine disappears. We'll obviously have to start factoring in rising COVID cases if that's going to cause bottlenecks and more inflationary pressures there. All right, going to the economic calendar. Monday, not a lot happening. Tier 1 sort of wise for market moving data. It starts on Tuesday in the overnight session. We've got the RBA meeting minutes. They're on hold until Ukraine basically and Russia finish. They are looking to raise rates, and if we go to the sort of rates of the yields, we can see here that the Aussie 10-year yield is at 2.415 currently, and the US 10-year yield is currently trading above 2, closely followed by the Canadian 10-year yield. The UK 10-year yield, we've got 3 bank decisions this week. We've got the Fed, the UK Bank of England, and then we've also got the Bank of Japan. You can see here the Japanese 10-year yields are 0.2, and the German Bund, their 10-year yields have basically now sort of got above, well, back above 0, out of this negative territory and starting to sort of trade more positively. So yields since 2020 going higher in the major economies. Australian dollar, Australian yields are going higher. Going to the economic calendar, going through UK unemployment rate looks like it's not going to be any different. So that's relatively positive, I guess. It would be good to see the unemployment rate drop further. That would be good for the UK pound. However, we have got European news on Tuesday. Got ZEW Economic Sentiment Index for March. Previous reading was 54.3 in February. It's looking like March is going to come in a lot lower, somewhere between 24 and 10. So if that happens, then that would be detrimental to the euro, assuming that there's no positive news out of Russia, Ukraine. Looking down into Wednesday, this is the day that I think the market is going to pivot on, and unfortunately it's at 7 p.m. for UK time. Prior to that, we've got the Japanese balance of trade. That's obviously we want to sort of see that their exports are rising. Inflation rate in Canada comes out at 1:30 p.m. same time as US retail sales. Inflation rate looks like it's going to go higher in Canada as it is everywhere else. So that would be maybe more calls for the Bank of Canada to raise their rates in the future as inflation goes higher. So that might be positive for the Canadian dollar, but the Canadian dollar has been pushed around by oil. Looking down here, retail sales looking likely to come in a lot lower for the US. We had the University of Michigan Sentiment Index last Friday. That showed that US sentiment is dropping greatly. But we've got the FOMC Fed interest rate decision looking likely to go from 0.25% up 25 basis points to 0.5. And if we look here, back on the 15th of March 2020, that's when they dropped it down to 0.25% in order to try and combat the effects of the COVID pandemic. And so it's been 2 years in the making that we get this rate hike, and the Fed are saying that they're behind the curve really in inflation, that they should have acted before. So the banks have been looking for more rate hikes this year. Parts of the FOMC have asked for at least rates back up to above or at 1% by July. So we're sort of expecting to hear FOMC be hawkish. Obviously, if they're not, then that might be dovish for the US dollar. US dollar, if we go to the chart, we go to daily. Here you can see that the dollar index itself has been rising all the way through 2021 up until recent times, just underneath the 100 mark here, big sort of psychological level. I'm expecting a tag of the 100 at least on the rate decision. It could be a case of buy the rumor, sell the news. But I am expecting the 100 to get tagged by Wednesday. That's obviously going to be detrimental to a pound USD cross or euro versus USD cross. But like I said, if the FOMC either don't surprise the upside or come in more dovish, then we could see the dollar drop quite dramatically. Going back to the economic calendar, get through Wednesday, then we've got the Bank of England interest rate on Thursday at 1 p.m. That comes in after the unemployment rate for Australia, which is basically going to be unchanged. So I'm not expecting the Australian dollar to move much from Wednesday into Thursday, apart from on the back of the FOMC. However, the pound, if we go to the pound chart, the Bank of England have been trying to support the pound the last couple of rate decisions from December. They've obviously added 2 on the spin, looking to put another 25 basis points on this week. It looks like, since the FOMC got hawkish in June 2021, we've seen a decline in the pound. Obviously, that got accelerated by the Russia-Ukraine situation. I'm not expecting the pound to really reverse much in terms of this direction, unless we can get a very hawkish Bank of England, less risk in Russia, Ukraine, and maybe a less hawkish FOMC. So it's going to take a few things to sort of line up before we can get the pound going higher again. Moving through housing permits for the US, maybe we get like a little blip higher on the markets if we get a good number out of that, because at the moment they're expecting to sort of see relatively sort of similar sort of numbers. Come Friday, inflation rate for Japan comes out, looking likely to go higher, as is everywhere else in the world. And the Bank of Japan are going to do nothing about that. So they're going to keep the interest rate decision exactly the same as it has been for quite a while now. If we go here, sort of see Japan, 2016 was the last time they changed their rates, and currently minus 0.1%. So if you're looking for a reason to get into dollar yen, dollar, if that does go back up to 0.5%, that's the carry trade really. You want to be in dollar and selling yens. So looking at the dollar yen chart, you can see here, big spike up, and this is a daily chart. Obviously 2020, big drop, pandemic. Then we had a drop down into January 2021, but since then we've been going a lot higher. So looking likely to take out the swing high from December 2016 and then try and move into early 2016 sort of numbers, maybe around 120. Right, so that's the week ahead. Just looking through euro versus US dollar, I've got this pitchfork sort of indicator, and the sort of confluence was a demand zone down here at 1.08, looking likely to see another test of that if this low from the 10th of March holds and the FOMC comes out in more hawkish without any positive news out of Russia, Ukraine. I think we come down to the 1.06. If we do get positive Russia, Ukraine, that's when the euro sort of catches a bid and we try and take out this fractal from the 10th of March. Dollar CAD, like I said, looking for the dollar to appreciate, Canadian dollar to depreciate. If we just quickly look at Brent, we've got a spike high up here, 7th of March, almost touch $136 a barrel. Looks like we're going to come back down, maybe test 100 again. We've got an impulsive move here. So on the 1st of March, had a big impulsive move, looking to see if we can fill that gap. We've got this rising trend line. If we get through the 100, then we could try and sweep some of these fractals down here, and that would lead us down to, say, the 2.6 fib extension. But going back to the dollar CAD, we had this clear range here to this big area of balance between 1.28 and 1.26. Broke higher, took out the liquidity above, broke lower, took out the liquidity below, gone back up, but then we actually closed above this swing high here, this fractal from the 24th of February. And we pull back down into the 1.27, also the 0.618 fib retracement. Now I'm looking to see if we can at least get back up, well, ideally above the 1.29. If I go down to like an hourly, it'd be great to initially get back above 1.278, obviously, move the stop to break even. But we've got this imbalance here between 1.287 and 1.285. So good 20 pips there to target. That's where some traders will take profits ahead of this balance area here. So that's what I'm looking at this week. Obviously, if we get more inflation, sort of more inflationary pressures come out, then I'm thinking the NASDAQ comes down a bit more. Looking at the actual price move in February 2020 down to March, when we had the COVID pandemic sort of sell-off, that was a 32% sort of sell-off from the highs of 9,800, I think it was, down to 6,006. You know, if we were to get another sort of similar move, that would actually take us down towards 11,000, maybe down towards this 0.618 sort of fib retracement level, around 10,500. So if we were to get a sort of a magnitude, a move of a similar magnitude to the COVID in this sort of corrective phase, then I'm looking for pullback a lot further down towards 11,000. So at the moment, I'm a seller of the NASDAQ. Every sort of rally, we're sort of selling. That's what we're looking at the moment. That's the week ahead for me. I'll speak to you again tomorrow. So take care, and I'll see you then.